The Indian share market, also known as the stock market, is a vibrant and crucial part of the country's economy. It facilitates the buying and selling of shares of publicly traded companies and offers a platform for companies to raise capital. Here's a brief overview of the Indian share market. Key stock exchanges. Bombay Stock Exchange, BSE. Founded. 1875. Location, Mumbai benchmark. Index SENSEX, which tracks the performance of 30 well-established companies across various sectors. National Stock Exchange, NSE. Founded, 1992. Location, Mumbai benchmark. Index, NIFTY 50, which consists of 50 diversified companies. Regulatory body Securities and Exchange Board of India, SEBI. Established 1992. Role: to regulate the securities market, protect investors and ensure fair market practices. Market segments: primary market, where companies issue new shares through initial public offerings, IPOs, to raise capital. Secondary market, where existing shares are traded among investors. Trading mechanism: trading hours, typically 9:15 a.m. to 3:30 p.m. IST on weekdays. Trading systems: both BSE and NSE use advanced electronic trading systems to facilitate trades. Settlement generally follows a T+2 settlement cycle. Trades are settled 2 days after the transaction date. Key indices: SENSEX tracks 30 financially sound and established companies listed on the BSE. NIFTY 50 tracks 50 major companies across 13 sectors listed on the NSE. Investment instruments: equities, shares of companies, derivatives, futures and options based on stocks, indices, commodities, etc. Mutual funds: pooled investment funds that invest in a diversified portfolio of securities. Exchange-traded funds, ETFs, funds traded on stock exchanges, much like stocks. Investor participation: retail investors, individual investors who buy and sell securities for personal accounts. Institutional investors, entities like mutual funds, pension funds, and insurance companies. Recent trends and developments: digital transformation, increased use of online trading platforms and mobile apps. Rising retail participation, more individual investors are entering the market. Regulatory enhancements: SEBI continuously updates regulations to enhance market transparency and protect investors. Economic reforms, government initiatives and policies influencing market dynamics. Challenges: market volatility, fluctuations due to domestic and global economic conditions. Regulatory compliance, ensuring all participants adhere to regulatory standards. Investor education, enhancing financial literacy among retail investors. Conclusion: the Indian share market is a dynamic component of the country's financial system, offering numerous opportunities for investors and companies alike. With its robust regulatory framework and growing investor base, it continues to evolve and contribute to India's economic growth.